In this video, I'll break down my weekly stats, go over my trade of the week, review a losing trade, share a few key lessons, and wrap up with my mindset heading into week 80. Quick disclaimer, this is not financial advice, just my trading journey and how I'm learning every week. This video is for information purposes only. This week, I took 22 trades in total, with 14 of them being winners, giving me a 33% win rate. My total profit came in at $2,627 with an average trade profit of $119. I did increase my risk slightly this week up to 4.6% due to the heightened volatility, and I felt comfortable with the adjustments based on how clean the setups were. My average delta came out to 39, reflecting a mix of single calls and debit spreads, and however, mostly credit spreads in the trading. Let's go over the trade of the week. This right here was what I call an A+ setup. This trade had confirmation signs that signaled a reversal was to come. For execution, I combined a call debit spread and a put credit spread to catch both the breakout and the momentum continuation. I walked away with $1,050 on this trade, and next time I think will be more because I know I can size up on these type of trades. Let's look at the confirmations. When we look at the 5 confirmations, you can see I had the higher time frame plus lower time frame confluence, a Fibonacci retracement of 61%, a trendline break, price action including an inverse head and shoulders, as well as a symmetric triangle, and lastly, I had the EMA trendline confirmation. Let's take a look at each confirmation. The next confirmation we had is the Fibonacci level. You can see after this first trend high, price came back to the 61% level, which is a Fibonacci level. Next, we had a trendline break. If I take the recent highs and connect all the highs, I can see that the upper end of the trend was broken right before my entry. So this was another confirmation. Lastly, we can confirm with the moving averages that the 9 moving average is above the 20 and the 50 moving average, confirming a strong trend in price right now. Next, if we look at price action, you can tell on the 5-minute chart on the right-hand side that we made an inverse head and shoulders. If you take these 3 lows, the first low at around 9 o'clock, the second low at 10:30, and the third low at 11:30, price makes an inverse head and shoulder pattern, which is a reversal pattern. So this was the last confirmation that this trade will be a good reversal trade. And as you can see with SPY, once we broke this trend line, we continue to rally for the rest of the day. This is what I call an A+ setup. Let's go on to the next trade. This is one of the most important trades of the week, not because of how it started, but because of how I managed it. My first entry on this SPX setup was a put credit spread, but I jumped in way too early. The setup hadn't fully formed and I paid the price. Price pushed through my break even and I had to accept the loss. This is where risk management comes in key. But here's where the discipline kicked in. I didn't chase, I didn't force revenge. I reset, waited for the better confirmation, and re-entered with a second credit spread on a much cleaner setup. This time I had price action confirmation, moving average trendline support with volume backing the move. That's 3 out of 7 confirmations, which is enough for me to take a trade. The second entry worked beautifully and I made back what I lost and then some. If you could take a look on the chart here, the first light blue candle represents where I first entered. As you can see, I entered on this bullish hammer. However, that's only one confirmation stick. That's only one confirmation with price action. And I had to sell because price continued to drop. The next time I entered the trade was on this third blue candlestick where we not only made a double bottom, but we also had volume spike. I can't see this on SPX right now, but there was a volume trend shift as well as price action trend shift. So I'm thinking reversal, and that's why I took the bull credit spread. With my break even being below the candle of the double bottom. And as you can see with SPX, we continued to rally for the rest of the day. And I was still above my break even, giving me full profit. So when we take a look at the second trade, you can see that my first trade was on a poor entry. However, the risk management was to sell for the loss and not hold forever. And next, the second credit spread was on a better setup where I had price action confirmation, EMA confirmation, and volume confirmation. Let's take a look at the next trade. Trade 702 was a put credit spread on NDX where I collected $2.36 and had a $460 win. This was a bull flag setup, but I didn't label it an A+ trade because we didn't have a higher time frame trendline break. So I had to lean more on price action and intraday momentum. On this setup, I had price action confirmation, EMA confirmation, and I received good premiums because I entered the trade very early in the day. I was able to withstand a drawdown because I entered so early in the day. So if we take a look at the entry, the first blue candle, this pullback was on an EMA level. However, you can see price continued to draw down. If you see the chart on the left, the orange line represents my break-even price. So even when prices drew down, I was still above my break-even. And then we made this inverse head and shoulders and continued to rally up. The lesson here is that if you enter on a good confirmation, for me, price was ranging up in the morning, pulled back, and I bought on the first retracement. Buying early and holding throughout the day because you get a good premium is a good sign of a good trade. The trade worked not because it was perfect, but because I respected structure, stayed patient, and let the distance between my entry and my break-even do its job. This week taught me some key lessons that I'm carrying forward. First, when I see A+ setups, I need to size up with intention. Those high conviction trades deserve more size, especially when prices line up. And lastly, because we're in a volatile environment, we can have days where the market goes up 12%. Second lesson is that confirmation matters. I've got to wait for multiple signals before committing. That means alignment from the higher time frame, pattern structure, trend line breaks, Fibonacci levels, price action, volume, and moving averages. When most of those are present, the trade has real weight behind it. And third, patience. Let the pattern form. Let the trade come to me. Rushing into setups early, especially without confirmation, is how I give back profits unnecessarily. These three things, sizing up on A+ setups, waiting for confluence, and staying patient, will keep me sharp. That wraps up my week breakdown. This week was a powerful reminder that discipline, structure, and mindset are everything, especially in volatile markets. I had trades that didn't go my way, but I stayed focused, trusted my system, and managed risk the right way. From the comeback early in the week to executing my top trade with confidence, I'm proud of how I handled everything going into week 80. The goals stay the same, staying patient, sizing up on A+ setups, waiting for confluence, because there's no need to force anything. I just need to stay sharp, stay consistent, and let the market come to me. Appreciate you guys all watching. If you're learning from these breakdowns, make sure to like, comment, or subscribe. And if you have any questions, just drop a comment. See you guys in week 80. Peace.